Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and today we are joined by Shiva Bhaskar. For God's sake, ridiculous.
Bhaskar, you got it.
Bhaskar, good, like NASCAR, Bhaskar, and
Exactly.
Ali
There you
J.
go.
Ali, thank you for your name being so simple. I really, really appreciate it. And I apologize profusely because I literally was thinking about it ahead of time and thinking I got to make sure I, get that right. And then it went right out of my head. So anyway, thank you so much for being here, guys. There is a lot going on as usual in the mortgage space. So I just want to take a moment and talk about retail sales, which came in today for May. It was expected to be up 0.2. It was up 0.1. Core was expected to be up, let's see, it was up 0.5, and that is the number that gets plugged into GDP. So the previous month's numbers were revised down, which is good. And so the
Well,
numbers
good,
are
depending
better.
on who you're asking.
Well, okay, so consumers are spending less, which God knows,
Yes.
we know that needs to happen because their credit is not doing so great, right? Delinquencies are up big time, highest levels in 13 years, and it is really a big issue. So it is interesting though, because the previous month was revised down to the point where it's really the numbers being reported inaccurately are really a humongous problem. It just continues to be an issue because if we had had the real numbers last time, that it would make this month anyway. Bottom line is it'd be nice if all these agencies that we're looking to for these headline numbers that are impacting the markets would get it together. So consumer and government spending have been driving our economy, and if consumer spending is in fact, this is month 2, really coming down, then it's going to reflect eventually in the numbers. So with that being said, okay, I can't believe this was only last Wednesday because it seems like it was 25 years ago, but the Fed came out with their decision. They did not move the rates. We expected that big time. I don't know if anyone else enjoys watching the statements that Jerome Powell makes after the meeting, but I do. It is very interesting. I have to say that the previous month, last month, I thought the questions from the reporters that are creating our news were really stupid overall. This month, they were better. Not great, but better. But what Powell did acknowledge is that they have restrictive policy at the moment. So that means our next move should be down. The quit rate is lower. The job openings are lower. The wage increases are slower, which is good. And he did acknowledge, which was really interesting and good, that there is a discrepancy between the business and household survey in the labor market, and that maybe the business survey is overstated. I mean, you think when you look at the difference between BLS's business survey and ADP, it's like night and day. So did not mention the birth death model though, which is a biggie. So with that being said, we have modest progress on inflation. That was changed from no progress, basically. So anyway, so there, it was, it, it'll be interesting to see what happens. Right now, they're saying maybe we'll have one Fed cut this year, maybe one. What do you guys
I
think?
judge the economy by how many people are asking me, do I know somebody hiring? And
Oh,
I'm
you
getting
judge
that
the
question a
economy by
lot
how many
lately.
tower cranes in any given city that you go
Yeah,
to.
oh yeah, I judge that one too. Very few right now.
Unless you're in
Under
Nashville,
10.
apparently. I was told
Yeah.
there are 50 in Nashville, for God's sake. So
Yeah. San
there
Francisco
you
is
go.
less than 10. That's not a good sign.
Yeah. Yeah. Well, there you go. So the dot plot, which is also very interesting, that the Fed released, showed that 4 of the members thought we'd have 0 in rate cuts this year. 7 said 1, 8 said 2. So the vast majority think we'll have at least 1 or 2. So that's something. We'll take it, right? And then we got PPI last week too, and the Fed did see it before they came out with their statement. And I had been told that they don't at all, they don't modify their statement at all. They did a little bit. So it was interesting. They did see it. There was an acknowledgement of it. The numbers were a little bit better. So inflation is getting better. And as we saw last Tuesday, so that was PPI. We had CPI last Tuesday, and then we have, just keeping with all the acronyms, PCE is on June 28th. So that's what the Fed really looks at. And we'll all want to keep our little eyes peeled. So with that being said, these wonderful gentlemen have been sitting here while I sit there and babble about all that. Let's talk about why you are here today. So you are in the credit repair and consumer space as far as credit reporting goes. And I want to just take it from the top and address the elephant in the room, which is a lot of times people think, okay, credit repair is a bunch of hooey. So the reason Kevin and I wanted to do this show for a long time, we've talked about it many times, and we've
Yep.
never done it because we never felt like we found the right people who were credible and responsible and professional. And so here was my test. You ready? We're having Mark McCardle with the CFPB on our show next week. I told Ali this, and I said, how do you feel about that? And he goes, that's great. I'm like, okay, these are our people. So with that being said, let's talk about credit repair and what you do, Shiva, which is you sue the reporting agencies. So I'm just fascinated by all this. So just tell us why you're, how you, not why, tell us how
You
you're
know, it's
different.
different.
Ali, you're muted.
Ali.
Was that me? I thought you were passing the ball to Shiva.
Go guys.
Okay. So so I think like one distinction to make like about the industry in general, right? My background is that I used to run a mortgage bank for my family. And we didn't trust anybody with credit repair. My family members had tried Lexington. They're like, this place is a sham.
So hang
So-
on, Lexington Law, right?
Lexington Law.
We've all
And
heard of Lexington Law. They're
Yeah.
very out there. They advertise, they're telling
Yeah.
how great they are. Tell us how they really are.
Well, I mean, they're owned by a private equity company, and they're not really a law firm. What they do, like, they don't do stuff that a law firm does. They send out generic letters in your name. That's it.
Mhm.
There's nothing going under an attorney letterhead or anything to that extent. They got sued by the CFPB for making false statements and what have you, and they had to pay $2 billion. Right.
2
And
billion. That's with a B.
yeah,
Yeah,
2
with a B.
billion,
It was a big
right?
one. Yeah.
Wow.
And this is the largest credit repair company. So, and they're basically the ones that set the precedent of how credit repair should be done. What is, what should be the modus operandi and what should be, and they basically made this monthly payment model pretty famous, where you pay a monthly fee into a rabbit hole forever, and you hope something comes off your credit report. And the CFPB basically came in and said, no, the CROA, which is Credit Repair Organization Act, and the TCPA, which is the telemarketing sales, TSR, the telemarketing sales regulation, states that you cannot charge a client at least until and after their credit is fixed, in a few months after in that case. And they lost that suit because they were charging upfront fees and not delivering and whatnot. But they've been doing this for a long time. And the problem with credit repair is there's not enough regulation to enforce the legislation that's already there. So in California, for instance, there are only a handful of companies that are registered with the Department of Justice to legally do business, but there are tons and tons of companies that are acting illicitly in open plain sight on Google, on Yelp, which is like beyond me, because there's just not enough enforcement. There's so many of these mom pop shops that dilute this, but there are a few big companies like Lexington, but then there are a lot of small mom pop shops. And I tell people, and one of the reasons why the credit repair industry has a bad reputation is Lexington sets this precedent that, the way credit repair is done is you pay us monthly forever and see what happens. But in actuality, credit repair should be done, is how me and Shiva have done this in the past, is we only charge after results. And sometimes we'll even get damages for the client. So the client doesn't pay anything up front. So there's often, on their part, there's no liability. And on our part, we got to make sure that we only take on clients who we can help out. Otherwise, it's a waste of time for us as well. So I think that will, if people follow those two rules, that they only pay after results, and whichever credit repair company they're dealing with, if they say, hey, we'll only pay you after results, 90% of credit repair companies will say no.
Wow, that's okay. So when somebody's looking for credit repair, well, obviously they would consult you first. And because it sounds like you're going to give them the straight shot on, okay, we can help when we can't, right? So tell us what your process looks like. What would we do as an LO?
Yeah, so the first thing is that when I look at a credit report from a loan officer, I check in, listen, let me know what the client's goal is, right? They're like, well, we need this account removed, or we need to get the client to a certain score, like a 700 score, to get their foot in the door for a jumbo loan. Perfect. So they're at 620, we need to get them to 700. Or we don't care about the score, we need to get rid of a certain account as such. And based on that, I'll look at the credit report for certain coding violations as such. Sometimes they may be a backstory and what have you. There's many, many times I could find certain things on credit reports. Like, I'll give you a very, one thing that me and Shiva kind of like worked on together was that we found that once an account's charged off, they remove all the on-time payments. Even as now the client can't see this, we see that on the back end, and we're like, okay, this is not accurate, because we're not saying that this account doesn't belong to the client. We're saying what you're reporting is not fully accurate, complete, and information is missing. Sometimes we'll see that the client, that the account was paid off in the back end in January 2020, and then it'll say, well, on another part of the credit report for the same account, it'll say that the account was paid off at a different date. So sometimes there's conflicting information. Sometimes even the credit bureaus are reporting conflicting information, and that could be our foot in the door to get this done. So we kind of like comb everything as such to find these back-end violations as such, and kind of thread the needle and go down that route. And a lot of times clients are not able to see this, but with Shiva, what he deals with, I'll pass that on to him. He looks at things a little bit differently where he comes in. But Shiva, go ahead.
Thank you, Ali. So where we come in is we have offered credit repair before, and in very rare cases we do, but primarily I look to Ali on that end. What we look for are items on the credit report that are in some way inaccurate. And the most obvious example is where they don't belong to the consumer, but that's fairly rare. 98 times out of 100, it does belong to the person, maybe a little less, but close enough. Of course, the few times when it doesn't, it's a big deal. And then even if it does belong to them and their account was charged off, how it's reported is often inaccurate. And then secondly, with collections accounts, which I know are the sort of the bane of a lot of mortgage deals because they can cause a lot of problems, there are a variety of things that are done by the major and minor debt collection agencies that don't comply with state and federal law, specifically the Rosenthal Act in California, or for the national audience, the Fair Debt Collection Practices Act. So the way that we come at it is we look at a credit report, we look at the collections, and we say, do we think that there are going to be things on here that either today are illegal, or that if the client made certain statements towards the collection agency or told them certain things, there's a good chance that they're going to mess it up. And so we look for that. And one of the stories that I always like to go back to, which I think really illustrates the power of this, is it was an identity theft case. And it was this gentleman who had immigrated to the US from China. He worked in tech out in New Jersey, had a good job. They had two twin boys who I think would now be about 11. But long story short, someone went and opened an account with Bank of America in his name. It appeared on all of his credit reports. And this was in 2021 when home prices were going nuts, as you guys remember, and still are, but maybe a little more slowly. And basically what happened was he and his wife were unable to buy a home for their family because this $9,000 charged off account that did not belong to them. And they went and filed police reports, did disputes with the credit agencies, did all of that. Nothing was corrected. And then he found out about us. He was connected with us. And what we were able to do in collaboration with our colleagues who were in the New York, New Jersey area, another law firm, we were actually able to sue the credit agencies. It didn't cost him anything because by law, they have to pay our attorney's fees either when the case settles or if it goes to verdict. We're able to get him across the 3 credit agencies plus Bank of America, help him get tens of thousands of dollars in damages, which went towards his down payment. So the amount of house he could buy went up because he had a larger down payment, and he already had a great income, him and his wife, but it went up. And most importantly, get their item corrected. And that may be a bit of a rare case, but I think it goes to show that if there is something negative on the credit report, it very often can make sense to reach out to Ali and myself, have us take a look. Maybe credit repair is the best option, but there are plenty of situations even less egregious than this where suing these guys, if it's not corrected, is really the best way to resolve it, and maybe even to put some money in the pockets of a potential home buyer as well.
How
Wow.
long does that process take, Shiva?
So that's the thing. It's definitely not conducive to if someone's trying to close in a few months. But here's the reality. It was already disputed with the credit bureau, so there was no way for him to be able to get a house quickly. That lawsuit, that's a good one, Audrey. That from the time that we did one more round of disputes for him to when the last defendant settled was about 15 months. Most
not
of them
terrible.
settled out early on, and Bank of America dragged it for longer. But the one caveat I want to add is in most cases, within 60 days of the lawsuit being filed and served, the negative items that are the subject of the litigation will be removed. So in this case, the Bank of America accounts, we did the disputes. The lawsuit was prepared about 6 weeks later. It was served. And within about 60 days of them being served with it, so within about 5 months after the disputes, that item was removed. It was off the credit. Now, he decided to wait to buy a house because he figured that we were going to get him money in the lawsuit that would help more with his down payment. But hypothetically, he could have gone ahead and bought it. And the reason they remove it is because they don't want us going to court and to the judge and being like, Your Honor, not only is this item illegal, even after we sued them, they haven't corrected it. It's still there.
Right.
But as far as the lawsuit settling, it takes time, but it often is worth it in terms of the client getting compensation.
Okay,
Wow.
so I just want to make sure that everyone's clear that I was skeptical because I wrote, and I quote, "So you're suing the bureaus, really?" So I
That's right.
love hearing that the consumer actually has some recourse. That is such a big deal. And we had a question, are you guys were able to help people in which states are you able to help people in or not?
So I'll take that one first. With with litigation and with lawsuits, depending on the type of case, we can take it almost anywhere. If it's identity theft, mixed file, a major credit reporting error, pretty much nationally we have attorneys who will take it. If it's a debt collection violation or something else, I'd say most states. And then as far as credit repair, I'll let Ali share where he
Yeah, so
operates.
most states aside from Georgia, pretty much. And the distinction that Shiva is talking about here is that if a loan officer sees something that's egregiously wrong and incorrect on somebody's credit report, or the client's like, "This is not mine. I'm a victim of identity theft," or they're told like, "I've paid this," so there's something that is wrong. It's factually wrong. That's keeping them from getting approved. That's where Shiva could come in and get them damages as such. Whereas with me, we also sue credit bureaus and so forth, but we do arbitrations and civil suits and small claims, which gain much quicker results. So generally, my turnaround times ends up being 60 to 120 days, sometimes 6 months, as such, because we're not going after damages. We're having the client pay us for the work that's done and the results that we produce. Whereas Shiva is saying, well, if there's something egregiously wrong on the credit report, we're going to take this to trial and get you as much as we can, and squeeze the credit bureaus for all this money, as such, that the client may be entitled to. I think somebody was asking where they could reach us. My website's imaxcredit.com. Shiva, you're at
Tier1credit.com. That's me. I dropped in the chat.
And we'll make
Gotcha.
sure we'll embed their contact information in the YouTube channel when it's posted by our good friend Jason Bellevue, who handles all that for us. And also Ali and I are planning a little something that we'll mention at the end. So anyway, we'll make sure that you have their contact information and that you can reach them for sure. It is very interesting. So when I've seen credit repair, one of the issues that I've come across is you can send your client to credit repair, but if they do other things to their credit in the middle of that process, all bets are off. And then they're like, "Oh, it didn't work." Well, dude, you just
Yeah, it
had
didn't work.
or you
You keep
just
screwing it
racked
up.
up another credit card, or you just, I mean, hello. So how can we work together with you guys, at the loan officers and you, to make sure that the client understands and stays on track with, doing their part, basically?
Yeah, so thank you for that. That's, first of all, I don't have an answer for that fixes the problem,
Okay.
right? But we
It is
always
a
tell the
problem,
client,
right?
yeah, Yeah, it does. It is an issue because the question at that point is like, how motivated is this client? Are they going through financial stress, or do they not really care? Because there are two types of clients: people that are really struggling and trying to get out of a bad mortgage or get cash out, and people that are, just not giving a crap.
The people
Right.
that don't pay bills don't pay bills.
I think it's not as simple as that. Because sometimes, especially in this economy, there are people that have to make decisions on what to pay, what not to pay. And then there are people that have the money and they're just spending it elsewhere. And, and I think I handled those two clients very differently. Initially, first of all, I was asking, how are you doing financially right now at this point? That's right off the bat. That's the first question I asked them. Are things okay? Well, if things are okay, perfect. I expect that you're not going to be late on anything else, because if you are, we're going to be derailed. And if things are not okay with a client, and the client's like, hey, I'm barely keeping my head above water, then I say, hey, if you're going to be late on something, you could be late on a utility bill, because that gives you an opportunity to be late 30 to 60 days without it going to collections. You can't be late on a credit card.
Unless they elect to report it or self-report.
Well, yes, good point. Very good point, right?
I've had people make that mistake and then make a late payment. Like,
thank you for that, right? So something that's not being reported on their credit report, they have some leeway to play around with that. But generally, it's figuring out like who's really in financial distress versus who's really not really motivated or paying attention, and wants to like not cooperate as such, and and not take things seriously. So that's one. But let me just go back. I just wanted to add one other thing too around this credit repair process as such, right? Is that number one, people sending business to credit repair companies. Listen, I think credit repair works. It works in certain instances. Often loan officers may not know when it works, when it doesn't work. Sometimes I need to look at a file. And I always recommend when people call me, or if I talk to a loan officer, the first thing I ask them is like, hey, I'm happy with my credit repair company, or I'm not. There are two things that I ask them. Number one, are they charging your clients upfront fees? If they are, they're not the company. Are they only charging clients after the credit repair is done? Because keep in mind, it is illegal right now to charge upfront fees. So if you're referring your clients somewhere where they're charging an upfront fee and not charging them after everything is done, then you're putting yourself in, if liability is on you because the referral came from you. And that's one of the reasons why people are able to easily send us, like Wells Fargo used to send us business, and some of their private bankers still do. US Bank does, Bank of America does. And the only reason why they feel safe to do that is that absolutely there is no liability for them, because clients only charge after their credit is fixed. So we can't mess up in any way.
very interesting.
And that's a litmus test. That's
Well, the other thing
big
is
one.
a lot of what these guys do is they just blanket the companies and saying, hey, this wasn't, and they just challenge every item that was late payment. And it's like, well, they made it. There's nothing to challenge. And yet sometimes they'll get it removed and that'll get their scores better. But then once the review is done, they put it right back on again. I'm correct in seeing what I'm saying?
That's reinsertion. That's reinsertion, right?
And
Because
that's illegal, actually. If they, one thing that we see is if you dispute something and it's a valid dispute, I'll put that caveat, and they reinsert it, they're supposed to notify you within 5 days of it. Very often they don't, and that's illegal. But I wanted to go back to the first point about if people are in financial trouble. I get this question from time to time, and the reality is that when we come across people who come to us and they're like, hey, is there anything illegal on my credit reports? And we look, and sometimes there may be, sometimes there may not. But if we're seeing that in the last 4 months they're going late, and tons of stuff is going to charge off, I'll use the B word, which is bankruptcy. We don't offer bankruptcy services. We know some great law firms around the country that do, but people have the stigma of, oh my God, bankruptcy is so bad, it's going to ruin my credit. Most folks who are filing bankruptcy or in the situation, their credit's already ruined, and they're actually facing the risk of something worse, which is being sued by their creditors in state court, or having their debts sold to someone who sues them. So one thing I'd say, I know people don't want to turn down a deal, and obviously if you guys can close it, that's great. But where people really are in financial distress and they're falling behind on accounts, there are situations where, whether you have a partnership with one or you're always welcome to reach out to Ali or I, where they should talk to maybe a bankruptcy attorney and do it. Because yes, that will mean the home purchase doesn't happen now, but the odds are if they're falling behind already, it's probably not gonna it's not gonna be something where, even if you remove some of the old accounts that are bad, the new ones are gonna offset it. And
Yeah.
we're not, realistically, no one's going to remove, if an account is currently falling 90 and 120 days late, okay, at the moment they're in default, it's not going to get removed from a credit report in most cases. And so they're not doing themselves favor. So I just say, for when folks hear that and they're like, oh my God, I don't want to do bankruptcy. Bankruptcy is a tool like any other. Hopefully they never have to use it, but if they do, they should be open to it. Because ultimately you can come back in several years and buy a house and be in a great position, versus having things go south and trying to clean it up and, throwing good money after bad, sort of.
Wow. Okay, so that is another really good point. We talk about being direct with our clients and telling them things that are true, even
That
if
they may not want to
comfortable,
hear.
that they may not want to hear, and that might be one of them. So there's a question in the chat, and I'm going to read it because I think it would apply to more than one person. So someone said, should my client talk with you? Her mortgage is serviced by Loan Depot. During the Loan Depot cyber incident in January 2024, she attempted to pay her mortgage first by phone, then online, then by check. On Loan Depot's rep's advice, she stopped payment to her check because Loan Depot had not cashed the check for more than 10 days. Of course, the next day, Loan Depot attempted to cash the check and it bounced. Neither the bank and Loan Depot informed her immediately. By the time she found out, the payment was 30 days late. She said as soon as she found out, but Loan Depot charged her. She paid as soon as Loan Depot found out, but Loan Depot charged her a late fee and reported her late to the bureaus. She'd never been late before, and now she's trying to do a transaction that's impacting her. So what is this a situation where you might be able to help? And when a lender is doing that, where they're making it impossible for you to make a payment, and then they charge you, have a 30-day late on your credit anyway, like how does someone deal with that? Not all at once. Come on.
Not all at
Yeah,
once.
so basically one of the things for this too, right? With Loan Depot, we've basically done plenty of limited action suits against them. That this is a very common issue with Loan Depot, New Res, Shell Point, and what have you, right? So this is kind of like down my alley, because there's a servicing issue as such. Somebody dropped the ball, right? But there's not something egregiously, there's not an egregious FCRA violation that Shiva could run with, like identity theft and other things, right? So generally what's happened with our last case on Loan Depot was somebody came to us, they had this billing issue with Loan Depot going back and forth. Loan Depot's like, this is your fault. Client's like, your fault. We said, fine, we'll basically ratchet up the case. We put a small claim suit, subpoenaed, them for a lot of information. They reached out to us and said, hey, we want to settle this matter. We don't want to go ahead and, go through all of this. So one of the things that clients do, the problems that clients do suffer from is that right now, aside from calling and complaining, they can't do anything. And, the mortgage services right now, especially because of the fact that they're not customer, the reason they're not customer service oriented is New Res, and you have like these different services. They're not really originators, so they don't care if they basically burn your client, right? They have no incentive, right? So they could basically do a horrible job servicing these loans, and still they're basically being referred over business, and they're being, they're basically buying these loans. They're basically servicing these loans, and because the customer is not asking to service the loans, they're being asked from the mortgage origination company or the first holder of the mortgage. So it's not in their interest to actually give anybody good customer service, period.
Wow.
Well, that's surprising, and not surprising because apparently many or most of the complaints the CFPB is getting
From
are
services.
about servicing.
Now, my understanding is for credit challenges and such that legally you almost have to write a letter. That a phone call doesn't protect your rights. That the letter is what starts your rights. Am I correct?
Yeah, correct. So under RESPA for mortgages,
yes,
at least, right? So for mortgages,
and a lot of credit issues.
So basically with FCRA, that's kind of like what first of all, in order for us to be able to sue the credit bureaus, which I do, and Shiva does as well too, a dispute needs to be sent out. Often I don't tell the client to dispute it themselves. I basically coach them on how to dispute it to trigger the violation, because
Right.
the language needs to be there. We need to put in all the codes that we find that are wrong as such. But yes, you can't sue the credit bureaus unless there's a dispute. You can't sue the creditor unless there's a dispute first. And that doesn't apply to collection companies that are calling you and violating the FDCPA, but Shiva could talk more about
Yeah,
that.
one comment on that. You do need it in writing, and this is an important point. You want to avoid ever disputing it online. Not because I know we do a lot of things online, but it severely limits what you can ask for, because they basically give you a multiple choice of what's wrong with your account. 1, 2, 3, 4. You're like, all of them, not one. Okay. That's the first issue. Secondly, you're limited to their choices. So what we recommend, and the way that Ali and I do it, is by sending a letter via certified mail, which the client reviews and approves, and then that is sent off. And that is how that is basically the approach we take. Now, one thing we have done in some cases, when we know there's an especially egregious violation on a credit report, we will do those disputes, have the results come back, have them say it's accurate, and then we will encourage the client to go on their own and call the credit agencies. In the identity theft cases and others, I have them call and say, I gave you a police report. What are you talking about? This is my account. It's not like, just talk to them. And very often you'll get the credit agencies admitting that they basically don't do any investigating. They just take whatever the creditor or the collection agency tells them and just report it. We literally have had
Right.
Equifax and TransUnion reps tell us, they're like, yeah, American Express said the account's yours, so it's yours. So my point being, there are situations, especially if it's something really, really bad, where we may have the client call in, but it should definitely always be in writing first by certified mail. And the letter should always include a few things. Obviously the date, it should be sent to an address, which Ali and I can share, the address for each credit agency. And it should contain the person's full legal name. It should contain their date of birth and the last 4 of their social. And they should also always be attaching a photo ID and proof of their mailing address. So passport or driver's license, and then also a bank statement, a cell phone bill, a utility bill. You want to make sure you have all of those attached to the letter, and you send it certified mail from the post office, or you could use a website like Letterstream and mail it online. But yeah, everything by certified mail with those documents is definitely recommended.
Wow. So someone asked the question and they said, what if you don't get paid? Do you ruin their credit? Ha ha. So what happens if you don't get paid? How does that work? Like,
Yeah, good.
have you
Yeah,
had that happen?
sometimes, right? Because sometimes somebody's going through financial issues. They lost their job and what have you. In that case, like, we don't want to do anything to even touch their credit or what have you. And then there's some people that just don't want to pay us. And our fallback for that is that once we get a legal settlement from the bank, they're saying they're removing something, the client has to sign. And at that particular point, the bank's attorney has to sign as well too. So that kind of like safeguards us at some point, right? And
So
what
nobody signs until you get paid? How does that, is
I
that
mean,
what
like
you
we
mean?
basically hold the funds
Okay,
as such in
smart.
escrow.
Okay, so good.
So
All
yeah.
right.
Hey, I
Right.
have a funny story to share about someone who had made a late payment one time. So way back in the day, I was actually an internal auditor for a savings and loan. And I was auditing the servicing department. And I was sitting in the service. So when I audit, you sit there, you kind of listen to what's going on while you're doing your audit. And a call comes in and it's a customer complaining that, hey, you reported me late and I was only a day late and I've never been late before. Can you please remove this as my, late payment? And the rep was basically coached, not to say no, you've been late according to this, we're not going to reverse it. But the client was persistent and she goes, well, listen, she kept just saying, well, can we take it to your supervisor? I don't remember what she said, but she got it. Finally got the rep to relinquish and go to supervisor. So she walks over while I'm sitting there and goes to supervisor, and the supervisor takes up the call, and the supervisor's laying the exact same line. Sorry, your records show that you were a day late, and that's the records, and therefore we're going to stay with the record. So then the next thing I hear, finally she gives up and she keeps pushing for the manager. So the manager's across the way. So the next thing I see the manager getting the call. The manager finally won't do anything. And then she's going, well, give me the name of your boss's name and phone number, right? Well, the boss is like senior VP of lending or whatever. She can't get a hold of him. But it just so happened, I was in a meeting with the senior VP of thing like 3 days later. And lo and behold, the secretary comes in and saying, yeah, we got this, Miss Johnson has this payment. And the senior VP goes, what's the difference? What we're talking about, $150 for a late fee or something like that. Do you know how much time my time is worth? Just waive it. And boom, it was waived. So it was pretty funny how it can happen if you just be persistent.
So 2 things here.
Yeah.
They were basically saying late fee versus late payment, 2 separate things. A lot of times they'll say we'll waive the late fee. That doesn't mean they're removing the late payment.
Very
So
good.
it is mortgage services will get into the FCRA states that if you're going to report something, you got to report accurately. So they start removing late payments, they will get their credit reporting rights revoked. That is why there's so much of pushback from the lenders that the agreements that they sign. Now, the caveat to that is that if we find some violations and then they're sued under litigation, they're allowed to do that.
Okay.
So
Interesting.
they really can't remove late payments anymore. They used to. Remember the
Yeah,
good old
it was
days?
so much easier. It was so much easier. And here's
So
one of the
much.
reasons why. Hold on. Here's one of the reasons why the mortgage mess happened. Back then, in 2010, 2008, I would tell people, hey, before hiring me, just, somebody would say, hey, I have a late payment. I'm like, call the servicer right now. About 30-40% of the time, the lates would come off.
Yeah.
Right. Mortgage, this, that, the other. The reason why they were coming off was somebody would, and sometimes the lender would say, hey, you can't afford your payment. Instead of $1,000, pay off $100, we'll mark you current. So what they were doing was they were gaming the system.
What?
Yes. So I heard this from, so I'm like, what on earth is happening? And then I know somebody that was an auditor for Fannie and Freddie, and they verified this when they audited, I think Golden One it was, if I'm not mistaken. So this was a practice that the mortgage companies and the lenders were using this tactic to remove late payments to conceal the performance of their loan. So that's one of the reasons why Hank and Ben Bernanke go to the Fed and say, you guys are not going to have an economy tomorrow. They're like, well, we don't know anything about defaults.
Wow. I have never heard that. That's crazy.
Yeah.
And just in case anybody's wondering, because typically Kevin's the acronym police and he's been completely silent today. FCRA is the Fair Credit Reporting Act. It is what you guys operate under. That's kind of how you live your lives, isn't it?
That's one of them. Yeah. Fair Credit Reporting Act, basically, it says a whole lot of things, but the crux of it is that everything on the credit report must be accurate. It must be verifiable. They need to have proof. It can't be over a certain age and it needs to be complete. And if it's not, it gives procedures for disputing it and for damages. And then the other one is FDCPA, Fair Debt Collection Practices Act. And that has relation to credit reporting, but not entirely. It kind of places restrictions on when and how a collection agency can contact you and other procedures. So those are really the 2 laws that come into play. And for people who are in California, we have state versions of those laws as well. So yeah, and Texas is also, yeah.
So let's talk about debt collection abuse for a minute, because there are many instances of collection companies who are just doing egregious things. Tell us how people should advise or deal with those situations.
Sure. So the first thing is, if there's a debt on that they are collecting on and which you believe is, you don't even have to believe it's inaccurate. You just want to know that it is a real debt and not some scam, and that these folks know what they're talking about. You should send a debt verification or debt validation letter. It's very simple. It'll have your name, last 4 of your social, your date of birth, no ID or proof of address needed. And you'll basically say, hey, I want proof of the debts that you're collecting on, which are in my name. You can do it online, or you can write to the collection agency, get their address from their website or from the Better Business Bureau or from your state attorney general. Ask them for proof of the debt. And that's the first one. Another one that I'll share with you that works really well and can actually get you paid and get them to stop bothering you is where basically you have a collection agency texting you or calling you or writing you by mail, or even they're not doing anything, you could just send them a letter and say, I will not pay the debt. Thanks. Have a nice day. You could literally say that. And outside of them serving you with a lawsuit or a few other very limited exceptions, if they continue calling you and you pick up the phone, or they keep sending you settlement offers, or they keep emailing you, you can actually sue them because you told them I won't pay the debt. When you say I will not pay the debt, the only thing they can do is contact you and say, okay, we're not going to contact you anymore, or they can serve you with a lawsuit. They cannot keep sending it. And what we're seeing right now, a lot of these agencies, if it was a credit card or a doctor's bill, they have your email and all of that and your phone number. They're texting you and emailing you, hey, pay the debt, pay the debt. Hey, we can settle for less. If you tell them you won't pay and they keep bothering you, you're entitled up to $1,000 in damages to get the account removed from your credit, and they pay out your attorney's fees. So ask them for proof of the debt. And if you want, tell them you won't pay the debt if they're bothering you, or tell them don't call me. And if they keep bothering you, then take legal recourse. We have people every month telling them I'm not going to pay, and they continue bothering, and we sue them.
Wow.
Smokes. Okay, so just for the record, so Ali does a class. Shiva, do you help him with this class? Are you doing this together? Or is this Ali's thing?
Well, Ali runs the class completely. We collaborate on a lot of things, but yeah, it's a great class that he has there.
So we're going to do a class in a few weeks. We're going to pick out a date, and we're going to send out something for everyone, and you can sign up so that it's about an hour and a half, right, Ali? And we're going to put that together so that people can, you'll have access to all these templates, everything that they can help, so that we can help our clients as much as we can before, and to make a determination about whether we should call Ali and Shiva. So it is, this is just so useful. I just can't even, it's kind of a relief, to be honest, because sometimes you see situations, you're like, okay, is this a problem? Is this not for instance, I have a client who was charged late fees. Now, not late payments, but late fees. And they had 2 mortgages with the same mortgage company. They send 2 checks in, one of them gets cash, the other one doesn't, for ages and ages. And then they have a late fee, and he's gone around in circles with this whole thing, and he's so frustrated. And I told him, I said, file a complaint with the CFPB because they'll address servicing issues sometimes, but maybe he's a candidate for you guys. I don't know. So yeah, maybe.
Yeah, absolutely. So just one thing, going back to the class is a loan officer credit certification class. After that, like, I basically, whoever completes that class gets a certification that you are a certified credit consultant. And the class goes over the basics of credit, how to read credit reports, how to actually consult clients on what to do for self-help options as such, and how to set up cases. And often with folks, right, I always tell people that, hey, if you're just not sure, just send it to me, because a lot of times it doesn't take me or my team more than 5 minutes to figure out what is going on. So if you're not sure, send it. If you're 100% sure that, hey, I don't need to send it here, only then hang on to the file and tell the client to do X, Y, Z. As such, so I have no problem and often, sometimes people send me a credit report and say, hey, listen, I don't think I need credit repair, but I just need some advice to get a few points. What do you say? I don't have no problem doing that. So, because the fact is that you guys are sending us business as such, and at the end of the day, I really think that this FICO system is really unfair, because keep in mind, the banks dictate how FICO calculates credit scores. And often what ends up happening with this is that it is so complicated that people just don't know what to do. And sometimes it's just doing 1 or 2 small things that, switches the score over.
So speaking of that, I heard a little trick that someone was promoting, and that was that instead of paying your credit cards down to 0, to leave a $5 balance or so on them.
Yeah.
Does that really help your credit score?
Yes. And the other myth is that leaving a 30% balance on credit cards, no, that is not where you should be. You should have one account at maybe 2% of the credit limit.
Yeah. 1 to 5% is across all of them. To Ali's point, is the optimal. We've heard this directly from Julie Woodring, who's an executive at FICO and deals a lot with this. So if someone has 5 credit cards and they can show either not even a balance, but just keep in mind the date that they're reporting it. If they see some spending, then that's good. There's folks who just like, I don't believe in credit cards. I'm going to have a few. I'm never going to use them, leave them in the drawer. I get that, but the problem is eventually these guys will close the cards because of non-use, number one. And number two, it'll look like there's never any activity happening, which doesn't really help. So having a slight usage or utilization of the card just a little bit does help you for sure.
And a few times you guys will see people that have no credit score but open accounts. If they don't use any of their accounts for 6 months and there's no activity on it, their score will go to 0. And the moment they use that card again, they'll generate a score.
And does using it mean they charged up on it but paid it in the month, or because
Even
payments?
just as long as there's some activity,
Yeah.
like a
Some
balance is left, or even it could be a balance from the last month, as long as they made a payment or there was a balance on the card.
Right.
Yeah, like just show some activity, because if you, I'll give an example. Like I have a card with Chase, which it's due on due date is the 2nd, and then I think they report around the 14th or the 16th. So whatever my balance is as of the 16th of that month is what shows up. But if I never use the card, and that means I never have to pay anything, but it's showing up as 0 every month on every card, then it's going to look like, wait, this person's not doing anything with
Right.
it. And having credit and never using it is not really managing it, right? And so that's kind of where thinking around this comes from. And so yeah.
Yeah. The other one I see people do, the big mistake I see people see when they see their credit report, that they see all these 0 accounts and, oh, I need to close those. I'm like, no, closing accounts never improves your score. It actually could bring it down because you're wiping out all that history you have. Am I correct?
It will
Absolutely.
remain on your report for up to 10 years, but what it's going to do is 7 to 10 years, but it'll go to closed accounts, and now your overall credit limits are reduced. So if you had 5 cards and $10,000 limit on each, now you have 4 cards with a $10,000 limit, means your total limits are lower, which that does not help your score. So even if the on-time payments remain, plus a closed account doesn't have the same impact as an open. So even if you're not using it much, it's reporting on time each month. Like I have a card with Citibank that I rarely use. Nothing against Citibank. I just don't use this one, but I've had it for a while. I make sure, Kevin, every couple months it's there. I kind of make it a point. You know what? Go fill some gas with it or buy some groceries and just pay it off. And that way it stays open. And I would really recommend with every card people have people do it. Because you went through the effort of having good credit, getting the card, keeping it open. You don't want to just give it up by closing it. Like use it every once in a while. And even if they're not making a lot off of you, they're making something in the processing fee, and they're going to want to keep you as a customer.
Just one big caveat to that is make a big, huge note to make the payment.
Yes.
That's why I've seen
Otherwise,
people
you're gonna have
get
to call
so
Ali and
burned.
take care of that.
Yeah, is they moved and then they found that Macy's card, or they went into Macy's and they said, oh, well, you have a card, why don't we just do it? And they forget that tell Macy's that they moved, statement goes to the old address, and oh my God, the $16 worth of socks just destroyed their credit.
So the CFPB has proposed that they have proposed removing medical debts from credit reports.
Oh, very interesting.
Yes. What are your thoughts on this? Will it have as much of an impact as we think it will? And we're really interested in your thoughts on this.
So all medical debts under $500 have already been removed. And if you pay the medical debt, it gets removed. So I think ones that are paid, whether insurance pays it or consumer pays it, is gone. And the small ones, which are really the dings. I think like anything else, I would say that like we do see a decent amount of medical debt. I think it's a little overblown in that I see a lot more telecom and credit card debt, particularly right now, popping up, and that's not going to change. Medical, the reason why there's an argument for removing it is because no one chooses to necessarily get sick and get slammed with whatever insurance is going to throw at you, versus a credit card, you do choose to open it. So I think it's a positive, but I think as with many things, when the media gets involved, they've overblown the impact. Most of the people who are not qualifying for mortgages, there are a portion for whom it's medical debt. The vast majority is not. The vast majority of them are unpaid credit cards, auto repossessions, things like that, which are not going anywhere. So I think you could see a small impact, and you have seen some, and I think that's good. But the borrowers that are truly damaged credit are usually because of more substantial issues, and those are obviously not going anywhere. So I think it could have a little impact, but not, they eliminated judgments from the credit report in 2017 and 18, and it used to show up. But when you guys pull LexisNexis, it still shows up on there. And if a judgment's not on your credit, but it is on their public records, they're absolutely not getting, you guys aren't trying to come in with someone who has a $9,000 judgment to attach a lien onto the house after behind a mortgage. So as with many things, I'd say there may be some impact, but I think the majority of the impact has been seen with the removing under $500 ones. I think the CFPB may want it. And secondly, we notice already, we're not going to get into politics, but we have an election coming up. What one administration does, another administration can very easily undo, depending on who they put in. And depending on what happens there, I won't be shocked that a different administration may have more the ear of these agencies and may do it differently. So very few of these changes are permanent.
Oh, geez, you're right. Thanks for bringing that up.
Yeah.
I live for the day when it becomes less political, where we stop having these whipsaws from one administration
Yeah, whiplash.
around mortgage issues. I'm like, it's mortgage, for God's sake. It should be risk and numbers and impact on the borrowers, and like, makes me crazy.
Hey, I wanted to bring up something that actually caused you guys to come on the show, and it was there was an article about zombie mortgages and where people had like second mortgages back in 2008, and the lenders just wrote them off. And then, but somehow they're still out there, and these guys are buying them, and then they're sending people notices that they're in foreclosure because this zombie mortgage has never been paid. Do you guys experience these, and what are people's rights when this happens to them?
Yeah, I've come across them. I don't know about you, Shiva, you could talk about it. I had a couple of cases. I'm not seeing them that often. We sued the lender on it. They reached out. Then we did due diligence on this. And in certain cases, they have the right to do this, depending on the note.
Right.
As such. So it's on a case-by-case basis, but thankfully, I'm not seeing this occur that much. The last time this happened was like about a year and a half ago, where a loan officer sent me a file. They were trying to close on a client, and something from 2012 came on.
I see it rarely, and part of that may have to do with, if it's not on the credit report, the only time we really get involved is if there's a judgment and they have a judgment on their credit. And we've had people with great credit, but they had a judgment that happened years ago and it's on there and they owe a bunch of money. And I had colleagues that negotiate those, or to the extent it can be negotiated. But we're not really seeing the zombie mortgages, Kevin. I mean, I'm hearing of it, but from a legal perspective, if they can show the chain of title and show that in fact they own this, then yeah, absolutely they can go after the house for it in those situations. Yeah.
And
if they can prove it. They can't always, but I think a lot of the ones that are buying it now can prove that, from what I've heard. Because there have been people who contested it in court, and once in a while they won, but there are a lot of them that these guys really broke it down and went into it and were able to demonstrate it. And if they can validly show that debt, then yeah, they can take action on it in many cases.
Okay, guys, one thing I wanted to talk about, just going back to credit cards, and I think loan officers spend a lot of money on doing rescores as such, in updating balances. And if you understand the credit report, you may not need to do it. And here's the key. The credit card companies, each credit card company reports a balance on the date the statement comes out. So what that basically means is whatever my statement shows, that is what the balance gets reported and updated within 2 to 3 days to the credit bureaus. So if you know when the next statement comes out, you'll know that 2-3 days afterwards, the balance will automatically get updated and so forth. So if you're looking at doing rescores for balance updates, just look at what the closing date is for each of the credit cards, and you may not need to do a rescore if you could wait till the statement closing end date. And for every credit card, it's a different closing end date, so they got to look at the statements from each of the credit cards they want the balance updated on.
That's great tip. My God, that's a great tip. I mean, and lenders will really appreciate that, since we can't pass that cost along to the borrower.
Absolutely right. And that's the type of stuff that I go in my credit certification class, and how to read the credit reports and figure this out.
Yeah, that's huge. Hang on, I need a moment. Like, that's a big deal.
Dropping the gems.
Shiva, can you
know, right?
So you shared the link to LexisNexis in the chat, but I don't think the audience can read it, only we can see them.
So, https://consumer.risk.
Oh, sorry about that. Okay, let me drop it to everyone.
No, not everyone.
It won't work. They won't see it.
Oh,
yeah,
okay.
don't ask
Yeah,
why. We can't figure it out.
So just I'll add this tip. If anyone wants to get their free bureau's credit reports for free, the official ones, like the ones we use for our lawsuits, visit annualcreditreport.com. It used to just Google annual credit report. It used to be once a year you would get it, as per federal law, the FACTA law from 2003. But during the pandemic, they made it where you could get it each week. So
Wow.
really, like if you want to, I know, and depending on the lender, I hear just from loan officers that given the changes in the market, many loan officers, maybe all, I don't know, are paying for their own credit pulls. If you really want to avoid hassles where you're going and paying for the credit pull for someone who's just not going to qualify, uh, one thing you could look at is tell them, hey, do you have Credit Karma? Okay, cool. Let me take a look at your report. The Credit Karma score is obviously not what y'all use for FICO,
Right.
but if the Credit Karma score is really low, or if you see a bunch of collections on there, you probably have a good idea that they're not going to qualify necessarily, and maybe they want to look into credit repair instead of incurring an inquiry. So that's one thought. Is I tell loan officers, look, if you want to avoid just in certain parts of the country and with certain, you know, sort of just where you're located, you might be getting a lot of these borrowers. Tell them, hey, why don't we take a look at your credit and have them pull up something for free so you guys are not going and paying for credit pulls to find out they have a 550. Because anyways, we're going to have to get their credit if Ali did credit repair or we did litigation. We're going to have
Yeah.
to do it. So that's one thing I'd say is take advantage of these free resources rather than necessarily spending your
Yeah,
money.
'cause
I
they're
know people
outrageous
want
now.
the application, but yeah.
This
Yeah.
is so great. So annualcreditreport.com. We've all heard of it. I did not know you could do it every week versus every year now.
Yeah,
So
I didn't know that.
that's another
New one.
gem. So, I mean, and is this something the borrower has to do? We can't go in there and pull one, right?
If they gave you permission, if they gave you written permission and so wrote you an email and said, hey, you know what, Audrey, I'd like you to do it, you can
Yep.
put them on the phone and you can put in their info and they'll get a code and they'll share the code with you so they can give you
Okay.
permission. And if they give you permission, then it's perfectly fine. And you'll have borrowers who are like, you know what, I trust you. Kevin, Audrey, I want to give you my social. I don't want to deal with saving it, PDFing it. I'm going to give you that anyway when I apply for a mortgage. There will not be any scores on there, but you know
You'll
what?
know.
The data is there. And if they really
Yeah.
want to score, they can always buy it from myfico.com. Buy it one time for $39. They get all of them. But I'd say don't even bother with that. If you
Right.
have them get it and you see a bunch of things on their credit, then rather than having them get an inquiry, which is going to further ding their score and get denied, why not, start working on the credit, right?
Oh
Yeah.
my God, this
I had
is
a client this week offer to give me all his bank account login information so I could just pull his bank statements. Like, no, I don't
God,
want
I've had that too.
information.
Like, God, no, 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 no. I do not want to have that. And did you hear that, guys? He said, get an email, get it in writing that
Yes.
you have their permission. Make sure it's in writing. Don't do it without it.
Yeah, and make sure it has their name. So if the borrower's name is Jessica, be like, hi, Jessica, I wanted your permission to access annualcreditreport.com with you on the phone. You're going to share your information with me. So you give me permission to input your information on the website and do it. If you get things in writing by email from people, they really you don't have to go like do a DocuSign, though you could if you
right.
want. But we always when we have people tell us, you know what, I don't want to deal with this. Can you guys do it? We have them sign off or do it by email, and then my team gets them on the phone and does it. And that way, there's no debate about permission. They gave you permission and you relied on it. You're good to go.
Yeah. And I mean, shockingly, I had a client the other day. I was on the phone with him, initial call. We were talking about the application, and I just happened to say, hey, if this seems like a lot, I'm happy to do this over the phone. And they literally said, oh my God, this is such a relief. Thank you so much. So people, I mean, be open to going
Yeah.
old school on some of this stuff because they do want our help. It does make us different than pushing a button or thinking that you just need some algorithm to get your loan. You need humans most of the time, and we are those humans, and let them know that you have value, for God's sake. So with that being said, you guys, this was great. I'm really looking forward to this class. So again, Ali and I will work on putting together a date and we'll send it out to everyone and let you know ahead of time that you can come. And can they bring friends? Can they bring realtors? It doesn't matter if we're online, right? Okay, God bless you. That is awesome. And again, we're going to have Mark McCardle with the CFPB on next week. We have a whole list of interesting things that we're looking forward to talking to him about. So make sure you're there. Did I mention live, Kevin? Is
Live, no
Yeah, we
recordings.
cannot record it. We cannot put it on our YouTube channel.
And I'll be reporting from somewhere else in the world.
So YouTube, go to our YouTube channel, Mortgage Pros 411, if you want to see this recording or any of the others in the past. They're great, some of them. No, I'm just kidding. But I like watching them on 1.5 speed if I'm going to watch something, because it just goes faster, but also, you know, it just goes faster. So with all that, Ali, Shiva, thank you from the bottom of our hearts. We'll make sure that we get
Yeah, that's really good.
your contact information. We'll put it on the YouTube channel, and anyone who is looking forward to talking to them or needs to know how to get a hold of them, let me know. I'm happy to point you in the right direction. You guys are great. Thank you so, so much. All right.
Thank you.
Thank you, guys.
Take care.
Have a
Thanks
great
for
day.
having us.
Bye-bye.